Howdy, everyone. This is Tyler Coates with alphanalysis.io. Running a little bit late this evening. Had my Sunday conversation with my mother run a little bit late. We got into a chat about sacred geometry, and that ran a little bit longer than I was expecting. So here I am. About 20 minutes later than was expected, but still had a good time to take a look at some charts. We just had the weekly close for Bitcoin, and that's generally going to be a very important point. If there was a very bullish close, then that could lead to some demand on some pullbacks that maybe would be selling pressure if there was not as good of a close. And I always pay very close attention to the price action within the first 20% of the open of a candle and the first 20% of the close, seeing how we move into the close. Do we just have a nice rally and then move sharply down given some sort of ugly wick, or did we find a way to sustain the recent price action, which we did get a very good close, but after that have seen a little bit of a pullback here during the first few hours after that closing candle. And that is something that I pay very close attention to and think can be potentially a good opportunity when there's a sharp reaction after the close counter to the trend. All right, let's go ahead and make sure that the audio is working tonight. I'm not seeing any complaints yet, so that's a good sign. All right. We'll go ahead and dive into some charts, getting some nice thumbs up already. Sure appreciate that. All right. Here we are looking at 4-hour chart on emasar. And we'll get into that in a minute. Let's go ahead and take a look at some trend lines. Paying close attention to this trend line here, seeing if this is going to be a level that we're able to sustain. On that sell-off yesterday, we found support well above that trend line, which is a very good sign. It makes me wonder if maybe again we may find some support above there, which would be very bullish. And when I see a nice trend line here, I like to just go ahead and copy and paste, see if we can get up a parallel sort of horizontal. And sure enough, see a nice little channel developing there. Maybe could even give one more for a median. Something like this. Yep, definitely seems like a interesting little channel that we are developing here with some nice support around here, and now seeing kind of the median act as support instead of the lower threshold, which is where I start to keep an eye out for potentially even the top of the channel breaking out. If you consistently fail to return to the bottom of a parallel channel, it's kind of suggesting that maybe a higher rate of return is what it's looking for in terms of rise over run, which if that is able to sustain, then it becomes a situation where it may want to accelerate. And we will have to wait and see here as many things could happen. But for me right now, that is going to be one of the main things I'm keeping an eye on. Get that out of there and take a look at the weekly candle. That's a nice close. And when I see this, I'm kind of, reminded of something like this or this, where you get a nice close and then the open kind of immediately goes counter to the trend. And if there is good support around here, there will certainly be plenty of time left for this thing to turn around from here. So definitely really like seeing that weekly close, and that first little head fake in the opposite direction is something that I would be definitely looking for, this being kind of a buying area, but only for the next couple days. I would not want to see it spending too much time down in here. And if it does move down into here in the first 10-20%, that's really what I like to look for in a like a kind of a small dip. Like if I'm looking to buy a dip that is turns into a green candle, like per se, like not many people are going to call this a dip here, but for me it definitely is. If you can get in somewhere in here when the price is moving down before it moves up, that's kind of maybe a shallow dip, which is all that I would really be wanting to see here. Some sort of shallow dip compared to something like this, which is more of a consolidation correction period. Will be interesting to see what happens. If the bears can build some momentum off of this, then we could certainly move down very quickly, and I could see it move all the way down into 38 while keeping this trend intact, the long-term trend. While that isn't necessarily a price that I want to hold all my long exposure through. So definitely seeing a lot that can happen. And this is where I think it's very important to be very diligent with managing risk and profit taking. If there's profit on the table, that's a very good situation to be in. And anybody that has spent any amount of time, speculating, understands that it is not the easiest thing just to find yourself in a position that is profitable. And when the market really moves fast, what I have found is that you can get yourself into some profitable positions, but that profit can disappear very, very quickly. So this is a spot where I am, very much wanting to be decisive with the decisions that I'm making, and doing everything that I can to stick to the plan. And but when the market is this volatile, moving this hard and this fast, I am really going to be, wanting to be very focused on taking some profit when it's on the table, while leaving some exposure there on the table as well. Taking a 20 to 80% profit anywhere in there, while gives me a chance to minimize some risk while leaving a good amount of exposure on the table. And when you get nice volatility, it gives you some of these opportunities that they may disappear as quickly as they came about. So before we get into the next thing, I realized I forgot to get myself a drink. I'll be right back. Down there. All right. We'll take a look at some short-term targets before getting into the daily process. Alrighty. So we were taking a look at this ascending triangle flagging type pattern, following the targets, following that first target, measured from here to here, but really more expecting the target measured from here to here. And right here was the confirmation, which gave us the 58.5 target. And, you know, that's a spot where we came so close to it. Maybe even got there. What was this high? 58.339. So $140 short on a $5,800 asset, within a breath of that target, to the point where I would say, you know, that was reached. And now I would be wanting to look for either a, you know, sharp reaction off of it due to all the selling pressure from people looking at similar targets, or maybe some nice consolidation as it gets ready to smash right through. This is consolidating in a upward fashion. As it is kind of peaking up towards this level and coming back, finding some good support, creating higher lows. You know, looks to me like it's ready to go ahead and break right through, as long as we're above this level. I do have a stop set here. I am viewing that as a bit of a shakeout, that violent move to the downside before a strong move back to the upside with a good wick. That's where I would be looking for that level to very much remain intact. And the target I'm currently looking at is the 4-hour moon on emasar. We have come up and tested the sky and found some resistance there, but the resistance didn't make the price go down. We have just continued to consolidate in an upward fashion as the sky is angled sharply upwards. So when it's angled sharply downwards, it's a spot where I really expect to hold as resistance, but once it starts angling up is when it really gets in danger, becomes a lot more vulnerable of a breakthrough. And if we are able to break through the bottom of the sky, then the moon would be the target, which is right now around 64. I do have some orders set at 62 based on some of the analysis I shared a few days back, which I think is still very much intact. But as we are continuing to creep up during these consolidation periods, instead of actually going down, the more I can see arguments for higher prices. Potentially even look at a target from a smaller time frame. Let's see here. I was thinking we were going to see more of a flagging pattern, kind of like we saw back here. Back here where you get the move above, And then the move back down below, kind of taking out some lows where some stops may be set. This is definitely not well defined, but I would still be using it to go ahead and measure some type of move like that. If we're able to reclaim this horizontal here around 57.5, then that target is waiting around 63.7, so right in line with where that 4-hour moon would be waiting. Definitely something to keep an eye on. All right, I am running now a little bit late for the hot spring, so I'm going to have to make this as quick as I can. We'll go ahead and take a quick look at the chat before moving on to the process. Bibbo Swanee says send it. I agree. A lot of talks about Elliott waves. Hopefully that's all looking good. All right. Pulling up the process now. Have some fun shows prepared for next week. So Tuesday, we'll be having Mark Wood on as a guest. That'll be a good show for sure. Would recommend anybody to check that out. And then I believe it's Thursday. I'm going to have to double check. I believe it's Thursday. We'll be having Bitcoin Bernoulli on to take a look at his longer term bubble cycles, which will be quite interesting as well. All right. Pull up the daily CMA. Quick announcement, did get the backtester out and available, but we did already run into a bug. So hold back on doing any backtesting until tomorrow. I think everything will be resolved by then. Just to let you know. And now that that has been released, it will free me up to work on putting out the rest of the stuff that I've planned on, the daily CMA being at the top of the list. Until then, you can pull it up yourself just by using a nice a 9 least square moving average and a 2 moving average that is, do that again real quick just so everybody can see. Simple moving average, moving average. Oh, moving average. Moving average. We're just going to do 2 length, source low, 2 length, source high, and excuse me, I'm struggling. When we close above the 9 least square moving average, our entry is between the 2 low and the 9 least square moving average. So still in that entry right here, in that entry zone, I would very much be looking for a close above the 9 least square mean, which is currently at 57,500. So very much looking for today to close above 57,500 to keep this trend intact. And I got some fills on this move down here. So now I've got trim orders set. Let's see, I think I was actually looking at the 4-hour. I'm looking at these highest closes down to that 2 high on the 4 hour. So 57.9 up to 58. Looking to go ahead and trim if I'm able to, you know, let's see. If the price moves 2% in favor in a matter of a few hours, and I'm able to trim, then that is going to be a very preferable situation where I'll be looking to take 20 to 30% profit if we can move back up in here. And that will very much help to minimize the risk while still leaving a good amount of exposure on the table. All right. So support. Resistance is 7,953. Stop would be that low, 53, 867. Take a look at emasar. Something I'm finding quite interesting. Something I'm finding quite interesting. Take a look at where we are here relative to the beach. We're way up here above the 50 moving average. This green, we've tested it, but consistently supported it. And it's a lot different than what we're seeing out of the alts. Alts are down testing the beach right now. Beach just disappeared on Ethereum due to the storm, but it is at that level that the beach would be displayed if it wasn't for stormy weather. And that last move down on the 20th went right into the beach, found beautiful support on the ocean. Litecoin, something similar, I believe. Yep, nice little beach test here. I got a great fill on that, and now I am very interested to see if it can continue to support the beach. We are very close to it right now, around 222. So what's interesting to me is that Bitcoin is looking a whole heck of a lot stronger than these alts that I'm seeing, where it is refusing to return down to the 1 hour beach while the alts are having no problem moving back there. Big sign of strength when you are supporting above a key level of support, as far as I'm concerned. Sky 59. Buoy 48. Four-hour beach 4424. Sky 59 to 48. Turn up. Buoy 3856. Underworld 36.7. Weekly CMA. All right. Big level of weekly support at 50, 10, 2, 0. Big level of support when I see these, the 2 low and the 9 converging, angled up sharply. That's an area I would be very interested in buying. paying close attention to this. This is threatening a bearish recross right here. That'd be a bad sign. I don't think it's going to happen, but I'll be paying attention. It just happened on the 4-hour. Recross, and it's now made a new low. Not a good sign at all. Okie dokie. Funding with 7.3% premium in the futures. It was at 10, so it's going to move back down. It's very interesting, along with still a very high funding rate. Let's see what happens there. Okay, gonna have to get logged back into the account to check the position. Should be around 45%. I went through this morning. We have had a new close. Not much action though since this morning. But I did get some fills since tonight. So I'm definitely probably over 50% now exposed. 52%. Risk. Let's take a look. Checking where the stop's at. I actually might need to adjust it. Ooh, it's got a sweet fill on Ethereum. Yes. Okay, 53.817 is where I'm set. Here's that weekly support. Okay, so I'm taking a stop below that low. Not sure if I like it. No, that ain't gonna work. It's a really tough spot. Really tough spot. And I really do want that low to hold. But yeah, maybe it's gonna be one of those ones that it's that peak below. All right, I might be taking on a little more risk right now than I want, which is not ever the feeling you like to have. Yeah, I can move that down to 55. Yeah. Okay, now feeling good. 58. 50. Okay. 50,500 stop. Is that right? 50,500. Okay. Yeah, that works. And risk now will be 12.28%. Entry. Okay. 45% of the account was exposed with a full hedge, so zero risk. And the remainder was entered with risk. So that is 17% of the account. So the estimated risk is going to be 12% of the entry, and the entry was for 17% of the account. So that total risk, good. For a total risk of 2.08% of the account. So hopefully that makes sense. 12% of the account was entered on that recent pullback. And with the stop now adjusted down to 50,500, I would be expecting to lose. Let's see here. Make sure I'm talking right before I say anything. So if it moves against and stops me out, then I will be losing 12% of the ad, and the ad was for 17% of the account. So I had 45% of the account entered with full hedge / no risk, added 17% of the account with a stop loss 12.28% below the price. So if it falls to 55, then I will lose 12.28% of 17%, which equals 2.08%. So that is the risk. Target risk is 2% to 5% due to the risk slider telling us min to moderate. And min more like 2 to 3%. So beautiful. All right, where we want to be. Price target 62 to 64. And orders. Stop loss at 55, trends at 58, 52, and all right, beautiful. Wondering if trims are about right. So if this gets filled, that would be solid, almost 10%. Yeah, almost 10% of the account. And then I'm looking for more up in here to scale out on the remainder, and hoping that I don't get triggered there before that happens. Okie dokie. I think that is going to do it. I'll take one last look at the chat and then call it a day. All right. Question from Crypto Chaco, those CMAs, do they work better on higher time frames? I think they're very effective on all time frames, and that they'll work best with the time frame that is most suited to you personally. Like for me, I just really struggle trading. Like the smaller time frames just don't really work for me. I have to, feels like spend way too much energy for the amount of reward that I can get from it. Whereas I still think the same rule would be very effective. And some other people like Joe or Joe Saz is just going to have a very hard time trading on higher time frames. So whatever seems to work best for you, if you find yourself, consistently glued to 5-minute and 15-minute charts, then, maybe trying it out on some smaller time frames will work well for you. Whereas it can, if that's the if that's where you're at, there's a couple ways to think about it. Is that it is very hard to wait for higher time frame closes when you are very much almost over engaged with the market, like just living and dying by every tick almost. It can be really hard to wait for a higher time frame close. But maybe that's what's needed. Maybe what's the hardest is what's the best. Maybe if you can discipline yourself to wait for daily and weekly closes to start to adjust and enter orders. For me, I find that to be hugely beneficial when we're halfway through a candle and stuff's going crazy, and I can just tell myself, you know what, I'm going to sit back and wait and see what happens at the close. That really helps me, and maybe it's something that could help somebody else who is finding it hard to get away from the smaller time frame charts. Whereas if the smaller time frame stuff is what's working for you relative to the higher time frame stuff, then I definitely think that the CMA, the Coates moving averages, should be basically as effective on all time frames as it is based on a very short period moving average that will be make it pretty darn difficult to divert from that mean for too long without some sort of sharp reaction back to where you were looking at, which is where I will very much be looking to set orders at the spots where I'm expecting sharp reactions. But when that sharp reaction doesn't occur, then I got to be ready to just go ahead and get right out. So hopefully that answers your question. And I would definitely encourage if you're really drawn towards the smaller time frames, but it just doesn't seem to be working too well, try out the higher time frames. I would definitely encourage anybody to try out the daily, the weekly. Using the Coates moving averages on the daily and the weekly have been very beneficial to me to help me to start to pinpoint some places where we could see some daily highs and daily lows. Because if I'm looking to buy today, I'm wanting to buy, near the daily low if I can, something in that vicinity. Whereas it doesn't really matter to me if that was a higher price or a lower price than yesterday. If I sell yesterday and take profit and then buy today at a higher price than I sold yesterday, but at a price that is, in a situation that's likely to, generate some profit for me, then that's all that matters is getting in, getting out, and then waiting for that next good setup. And I could care less about if I'm buying in back in at a higher price than I sold out, as long as I'm selling out in situations where I am going to be, it's going to be very beneficial to hedge and to manage risk, and then waiting to buy back in until it's, you know, a really, really good situation to do so. So I think that is something that a lot of people get caught up on mentally, is if you're buying higher than you just sold, but you are consistently selling higher than you buy, you know, is that buying high, buying low and selling high, even though you are buying back higher? Something to think about. And it's easy to get caught up in the mental loop of trying to always buy the exact low and sell the exact top, whereas having a having the ability to realize that just simply is not going to happen, and that you are going to just have to, you know, consistently be patient and be okay with not getting filled during the times that you really want to, and then getting filled at the exact wrong time when it you know, moves sharply against. So that's basically what I a little bit of a ramble there about selecting timeframes. And I think maybe what I'm trying to say is that it's very easy to get sucked into the lower timeframes, and it's really can be very, very hard to stay disciplined when using the higher timeframes. And what I've found personally is that often what is the hardest thing to do is the thing that I should really be focusing on getting better at. Whereas it's also true that if you have gone down that path of really, really, really challenging yourself until you find what is working, what time frame is working, then once you get to that point, stick to that. But until then, don't be afraid of, or try your best to experiment with the higher time frames, even though, and especially when it seems almost impossible to wait, you know, a few days or a few hours for that close. So hopefully that makes sense. Hopefully that helps everybody. I will be back tomorrow at the, not sure what time yet, we'll have to see, and we'll do my best to post the link ahead of time, and there will be plenty of good action to talk about then, I'm sure, as my eyes will be glued to the chart over the next 24 hours or so. So thank you all for tuning in. Smash the likes and be sure to subscribe and click the bell. Cheers.